Ashish Pandey is asking that I have my only debt investment in PPF. And I'm really puzzled to know that experts have such varying advice on this investment instrument. My investment is in PPF is 12.5% of my total investment. It has completed only 6 years. So should I continue in PPF or invest in other avenues? My retirement has begun. I would say that, I will tell you the story. The short answer to your question is that carry on with your PPF, take the tax-free income primarily because your retirement has begun. But I will tell you the story for and against PPF and why it is so popular. PPF is popular because it is one of the oldest high-yielding tax-free which gets you multiple benefits. One, it carries the highest safety. It carries the sovereign guarantee. It is issued by Government of India, and there is unlikely to be a default. The other is that the interest income that is earned on PPF is completely tax-free. So that's another benefit. Third is that it gets you the tax benefit. In olden times, for last 10, 15, 20, 25 years, stock market was not accessible. Mutual funds were not there. They were seasonal investments. Mutual funds used to be seasonal investment. People used to experience bad and ugly and good. Investors mostly used to, invest. Mutual fund is a recent phenomenon. Last 10 years, it has gained popularity. Last 4 or 5 years, it has gained, it is becoming well on its way to becoming mainstream for some individuals. But still, it is not the primary way people save. PPF has the history and it gives guaranteed income. And historically in India, we had very high inflation, so very high fixed income rate. PPF used to earn 11% as well, not very long ago. So the combination of safety, tax-free, and getting the tax benefit on your investment, higher return or perceived higher return. It was not very high return, but in absolute terms, it looked good. Also, stock market was extremely volatile. People were not used to it. People were not methodical about it. You could not do SIP 15 years ago the way you do now. So that is the reason why PPF is very popular. And if your parents and grandparents have experienced PPF and it has worked nicely for them, they tell the children that open your PPF account, and rightly so. The disadvantage of PPF is, in coming times, which I visualize, that interest rates will come down, and equity turns out to be a better investment avenue for a 15-year term for which PPF is, and even 2-3% higher return than PPF. And PPF is effectively a 15-year recurring deposit. It is a 15-year SIP in a fixed income fund, in fixed income. So if you do, your equity SIP in even the worst of funds or even a below average fund for next 15 years, I'm confident that, it will beat PPF. Simply if it is equity, if it is diversified, and if it goes up and down, it is not necessarily the best fund, it will still beat it simply because your SIP, your ability to average your investment in equity will do the job, will do the wonders. So that is the reason why it is not a great accumulation vehicle, but most people who have accumulated, I think it is worthwhile to hold it because there is no other investment vehicle where your accumulation will generate tax-free income. So if you have done it, hold it. If you are still accumulating it, for youngsters, I would say that do your SIP. Once you have, there could be a role for PPF even for those people after a point. Simply because, any investor's portfolio should have a component of fixed income. Once your scale goes up, once you are investing, don't start with PPF. Youngsters should not start with PPF. When you are getting started, you have a lot of time. Your early years, invest in equity. Once your investment scale goes up, your savings scale goes up with your rise in earnings. Once you are investing, say 1 lakh rupees a month, then maybe 12,500 rupees in PPF 3 years from now is okay, or 5 years from now is okay, because you are accumulating, you are investing a small part of your total investment. It will accumulate into something which will generate tax-free income. It is absolutely safe, and you're fixed, and every investor should also have fixed income as part of their portfolio. So it should be there, and it should not be there to begin with for youngsters. And after a point, you should have it. If you already have it, so it's a very complicated answer which I am giving you. But they are all valid. So I'm not a PPF opponent or a PPF supporter. Its appropriateness depends on different people in their different context.